welcome to the first episode of Season 4 of ECCB Connects. We'll be kicking off by looking at the Banking Act. I have with me Merlise O'Loughlin, Director of the Legal Services Department. Merlise, welcome to ECCB Connects.
Thank you for having me, Shermalan.
Merlise, over the past 2 years, we've been hearing a lot about the Banking Act. I know there's the old act and the new act was passed in 2015. Let's first look at the Banking Act. What does it govern?
The Banking Act, Shermalan, essentially is the piece of legislation that regulates banking business. So all financial institutions carrying on banking business are expected to be licensed under the Banking Act. So banking legislation has been in existence for quite a number of years now. Over the years, that piece of legislation would have been revised. The most recent revision, which you would have indicated, would have been in 2015. However, prior to that, the last time it was revised would have been around 2004, 2005, thereabout. Now, under that 2004 piece of legislation, the framework was slightly different from what it is now. Under that old piece of legislation, essentially, you had 8 distinct ministerial licensing authorities. So for a bank to operate within any of the jurisdictions, that bank would have to apply for a license from the Minister for Finance in the respective member jurisdictions. So if a bank wanted to operate in all 8 territories, that bank would have had to apply for a license from each of the Ministers of Finance in the 8 member territories.
I have 8 different licenses.
8 different licenses, that's correct, Shermalan.
Now, in 2015, the new act was passed. It was debated in all the parliaments in the ECCB member countries, passed in 2015. Why was there a need to change from the old to the new?
Several reasons. You would recall that I would have indicated that the prior act would have been passed sometime in 2004. So we are talking about 11 years later, and after 11 years, it's about time that we revisit the legislative framework because, of course, times would have changed. Also, we have to bear in mind that this is post the global financial crisis, and that crisis would have exposed certain weaknesses and vulnerabilities in our system. And so there was a need to revisit that framework to buttress the tools that were available to the central bank in order to allow it to treat with some of the issues that were observed in relation to licensed financial institutions under that particular regime.
What are some of the major changes?
Well, I would reference the centralization of the licensing authority. Earlier, I would have indicated to you that under the 2004 legislation, you had 8 distinct ministerial licensing authorities. Under this new act, the licensing authority has been centralized. So the responsibility for licensing of banks now resides with the central bank. So that authority has been transferred from the Ministers of Finance in the respective member territories to the central bank. Now, one of the things that the Act ushers in is what we call a single banking space. So essentially what we are seeing is a removal of borders, as it were, for the purposes of banking. So now we are talking about one space for the purposes of banking. So a license that is issued to a commercial bank allows it to operate in the Eastern Caribbean Currency Union, which is the collective states of the currency union, the 8 member territories of the currency union, one space. So it's no longer 8 licenses to operate in the respective member jurisdictions.
So if you're granted one, you can
if you're
operate
granted
in
one
any
license, you're operating within the space of the ECCU. Of course, you would have to get the approval of the central bank to open. In this case, it would be a branch in any of the member territories. or anywhere else in a single territory. So that's a major change, that's a major shift. One of the other areas that was tackled is in the area of our remedial action or corrective action tools. Those tools were strengthened, so now the central bank has available to it more tools in terms of resolving certain institutions if there are any issues, weaknesses that may be observed in a particular institution, then the central bank now has more tools available to it to treat with those issues. So there are cease and desist orders, certain directives, prohibitive orders that can be issued by the central bank against the licensed financial institution. And there are also actions that the bank can take against directors and significant shareholders and officers of those institutions. So those tools have been greatly strengthened.
And I guess this is really important given that the central bank's role is to protect the interests of depositors.
That's correct, Shermalon. One of the other areas as well, we look at the resolution tools. And you would be aware that over the years you would have had occasion to intervene in some of our banks. In the case of Antigua and Barbuda, we would have had the Bank of Antigua. More recently, we would have had ABI Bank, and in Anguilla, we would have had the CCB, Caribbean Commercial Bank, as well as the National Bank of Anguilla. Now, those three latter banks, NBA, CCB in Anguilla, as well as the ABI Bank in Antigua and Barbuda, would have benefited from the new resolution tools that were implemented under the new banking regime. And so we would have had the opportunity to use those new tools in relation to the resolution of those three particular institutions. And those essentially are the major changes that would have been introduced under the new Banking Act. And another important area that was covered, Shermalon, was the capital requirements for banks licensed under the Act. Now, under the previous Act, the capital, the paid-up capital, minimum paid-up capital requirement, that is, was set as $5 million for banks. Now,
just explain before you go on, when you say minimum paid-up capital, what exactly is that?
Well, essentially, capital is money, money that the investors or the owners of the institution would put into that business in order to facilitate its operations.
So for example, for somebody who is interested in opening a bank, they must have that minimum amount.
That minimum amount, yes, Shermalon, that's correct. So it was $5 million under the previous act. Under this new act, it was increased to $20 million. So that's a significant increase. Of course, mindful of the fact that there's that drastic increase in the capital requirement, those provisions did not come into immediate effect upon passage of the legislation. There were transitional provisions that were built into the legislation, which allowed a period of 450 days to allow banks to comply with that increase in the capital requirement. So banks would have been given time in order to, if necessary, raise additional capital to meet that minimum threshold.
Why the need for that jump? I imagine quite a number of banks would say, wow, that's a huge jump from 5 million to 20 million.
Yes, but we recognize that our banks would have increased in size and the risks would have increased as well. And so it was necessary to augment the capital requirements for those institutions.
And I guess with that, it makes it a stronger institution. It means more protection for customers.
Indeed.
Marlies, I recall when the new Banking Act, when the discussions were going on, there was some concern about the term credit institutions because the Banking Act covers financial institutions and credit institutions licensed under the Banking Act. What's the difference between the financial institution? Now you have like the commercial banks, credit institutions. When you speak about credit institutions, what are you referring to?
Yes, sure, Malone, and I know that that term would have caused some issues. Persons were confusing the term with credit unions, but just to be clear, the Banking Act does not govern credit unions. Credit unions are subject to a separate piece of legislation, the Cooperative Societies Acts in our respective member territories, and they are governed by a different regulator.
Not governed by the ECCB,
Not
not
governed by the
regulated by the
ECCB.
ECCB.
When we refer to credit institutions under the Banking Act, we are referring to those non-bank financial institutions that are licensed under the Banking Act. They are engaged in mortgage lending and granting of other credit facilities, and those are the types of institutions that we are referring to.
What separates the credit institutions from the commercial banks? What's the distinction?
Credit institutions engage in mortgage lending and granting of credit facilities. Banks, although they do provide those services, in addition to that, they also provide checking services which a credit institution would not provide. So that's one of the major distinctions between a credit institution and a bank.
Malise, okay, we've had the new act in 2015, but since then there have been some reforms. First of all, 2015 is now 2017, a short period, and there are reforms. Why the need for reforms?
Well, Shermalon, as you would appreciate, no piece of legislation is perfect. And as we implement this new piece of legislation, there have been issues that have arisen from a practical standpoint that has made it necessary for us to revisit certain provisions in the legislation. We would have consulted with the banking industry. We would have also consulted with the auditing fraternity, and we would have gotten some comments and feedback on certain provisions in the Act, as well as our own banking supervisors here in administering the legislation would have recognized certain issues that they thought should be addressed as well. And so we felt the need to revisit those respective areas of the legislation and, as it were, address those particular challenges and issues that were identified.
So take us through the reforms.
There was a ministerial committee of the Monetary Council that was established under the chairmanship of Prime Minister Dr. the Honorable Ralph Gonsalves. The other members of that committee are Prime Ministers Gaston Brown and Timothy Harris. That committee was set up essentially to spearhead consultations with the industry and essentially usher these proposed amendments through the legislative process to enactment. So that workshop that was held in St. Vincent and the Grenadines is part of that consultative process with the industry and other stakeholders on the proposed areas of amendment. That workshop would have been chaired by Dr. Ralph Gonsalves, and the other two prime ministers were in attendance as well.
Who were the other
The
people
other
involved?
participants at the workshop included, of course, representatives from the ECCB, representatives from the banking industry. So you had the ECCU, Bankers Association, represented, as well as some of our local bankers associations. We had representatives from the ministries of finance, as well as the attorneys general chambers. And so we were able to go through a few of the policy areas, forge consensus on those areas, and essentially refine the draft amendments to give effect to those policy issues and agree on the way forward, which would ultimately result in the enactment of those proposed amendments.
What then were the main areas of reform that were agreed on during that workshop?
The main areas were essentially, one would have been the licensing fees. That issue arose in light of the treatment under the Banking Act as it relates to the distinction between local financial institutions and foreign financial institutions. Now, local financial institutions would pay a lower licensing fee than foreign financial institutions. The issue that we encountered in relation to foreign financial institutions that are CARICOM nationals, they would have essentially been subjected to a higher licensing fee than our local financial institutions. And that created some challenges for our member governments who are parties to the revised Treaty of Chaguaramas establishing the CARICOM community. Now, under the revised treaty, there is that prohibition against discrimination on the basis of nationality. And so we had to revisit that fee structure to ensure that our foreign financial institutions that are CARICOM nationals are treated in the same way as our local financial institutions as far as the payment of licensing fees are concerned. So that's one area of amendment. The other area of amendment had to do with the auditing requirement. Now, there was a change under the new act which reduced the period of time that a licensed financial institution can use an auditing firm. So the auditing firm can be engaged by the bank for a period of 6 years maximum. The lead and concurring partner would have to be changed every 3 years. Now, based on comments that we would have received, both from the bankers as well as from the auditing industry, recognized because of the dearth of auditors in the sub-region that limited period would be a bit restrictive for the banks. So there was a need to revert to the previous position where we would now allow the banks to appoint the auditing firm for a period of 9 years max, and the lead and concurring partner would be changed every 6 years. So we essentially reverting to the position under the previous regime. One other area that we also considered is the administrative penalty mechanism. Now, that was a new mechanism that was introduced under the new act. We would not have utilized that tool under the previous regime. So essentially, it allows the central bank to apply a penalty where a financial institution would have been in breach of certain provisions of the act. And it has been a very useful tool, and so the intention is to apply that mechanism to a wider category of breaches. The final area that we would have considered, and these are just broad areas, the final area that we would have considered had to do with financial limitations. There were certain limitations placed on banks that limited their ability to pay dividends in certain circumstances. We would have revisited those provisions. There were also restrictions in terms of lending to employees. We would have also addressed those areas as well. So just to give you an idea of the broad areas that were considered.
That one on penalties is quite interesting because it means then that the banks, it's a tool to ensure that they keep in line, with international best practices, that their operations are sound, and overall protection of depositors.
That's correct, Shermalan.
Marlies, what's the next step with respect to the Banking Act?
Well, having had that workshop in St. Vincent and the Grenadines, we are in the process now of refining the draft amendments. The next stage upon finalization of those amendments, we will be going to the Monetary Council The next meeting is in July for approval of those draft amendments. Following approval by the Monetary Council, we expect that those amendments will be submitted to member territories for passage by the respective parliaments.
The ordinary man on the street may ask, Banking Act, changes to the Banking Act, reforms, why should I care?
You should care because we are all depositors at the end of the day. We hold our wealth as citizens in commercial banks. There are very few alternatives in terms of where we can invest our monies, and so for most of us, we put our life savings in commercial banks, and at the end of the day, we want to ensure that when we are able to access, when we want to access our funds, that they are accessible, that they are there. And so the regulatory framework is necessary to ensure that there is that protection that is afforded to all depositors and creditors. And so when you put your head to rest at night, you can be assured that your funds, your deposits are in an institution that is well governed, well regulated, and when necessary, you will be able to access those funds.
So I put my money in the bank, it's protected, it's safe, it's there, I can get it when I want it. No problems.
No problems.
Elise, thank you very much for speaking with us on ECCB Connects.
Thank you, Sherman, it was my pleasure.
You're watching ECCB Connects, protecting our currency, developing our region. To view any episode of ECCB Connects, anytime, any place, at your convenience, check out our YouTube channel, ECCB Connects.
We've come to the end of the first episode of Season 4. Do join us again next week when we look at the payment system.